Hey, how's it going, everyone? My name is Amos, and I gotta tell you, AMD just posted their earnings, and I am absolutely, utterly devastated, but also confused. Because after they posted in the after hours, they're now down by almost -9%, which means AMD is effectively $108 a share. I'm gonna be talking about what exactly happened and what I think that AMD should be fairly valued at, and I'll also touch upon Microsoft, Google, and Palantir. There's a lot to talk about, so let's go ahead and get into it. So as you can see by this headline, AMD crushed their earnings. However, they disappointed the analysts because AMD did not blow them out of the water when it comes to their data center revenue. So the forecast and analysts, they expected $1.08 for their earnings per share, and they beat it, posting $1.09 instead. That's great. When we talk about their revenue, they expected $7.5 billion. Instead, AMD posted $7.6 billion. So by all metrics and understanding the logic of the stock market, the company should be rising and skyrocketing in the after hours, right? However, they're just crashing, and that's because as I scroll down right here and I show you about the data center, they posted $3.8 billion for their data center chip sales, which is up, by the way, 69% year over year. However, they fell short because the estimation was $4.1 billion for one quarter, not the whole fiscal year, one quarter, 90 days. And to make matters worse as to why I'm so confused, when you think about their data center business segment, it increased by 94% year over year. Their full revenue was $12.6 billion. When I hear a number like 94%, that makes me absolutely bullish. But I think the analysts are very short-sighted and they're saying, whoa, they missed 3.8, not good enough. We wanted to hear 4.1. As a matter of fact, we're going to make sure that everyone is going to sell out of this stock right now through all of the algorithms and automatic trading orders. We're going to punish you beyond belief, which to me absolutely hurts. I feel like I'm going through my first breakup with a friend where you hang out all the time, you know each other's biggest secrets and weaknesses and ambitions and goals, and then one day you're not friends anymore. Like, going through that type of hurt is what I feel right now with AMD. However, I have to remind myself of the facts. I'm not basing this off of speculation or off of theories or off of what could be. If I just look at the hard facts, if you look at their P&L, the fiscal year that just ended for them in 2024, look at the revenue picture. $25.7 billion, which is up year over year by 14%. Their gross profit, up by 20%. Their margins improved. It's now 53%. Are you freaking kidding me? That's up from 50% from the year prior. When we talk about their operating income, that's also up by 26%. Their net income went up by 26%. Their earnings per share went up by 25%. So when I look at the facts and I look at the numbers, I'm like, dude, what is happening? How is the stock market punishing them so freaking hard for a slight miss in the data center segment? Like, it just makes no sense to me. And when we look at it broken down by their various business segments, I want to start off with this one right here, the gaming. This was what AMD was historically known for. Their Ryzen chips and the enthusiastic gamer market. Like, AMD was the go-to. To see it go down by 58%, yeah, that's a pretty heavy blow. However, the market does not give a crap about the gaming division or prospects or future. The market, as you can see, they only care about data centers and the word AI. And follow me right here, back up to this line item number 1. When you think about the data center, which is also associated with AI, up by 94%. When you look at the operating income year over year, up by 175%. How are the tits not jacked on Wall Street for AMD? How are they punishing this stock right now? It blows my mind. And when we think about the client and server CPUs, it's up by 52% because they're eating up the market share from Intel. So AMD is looking good and they're doing all of the right things, except when it comes to the gaming and then of course the embedded market, but they're making up for it by being a cash-heavy business. Case in point, when you look at their balance sheet, Right now, they have $5.1 billion of cash and cash equivalents on hand to $1.7 billion of total debt. Not just short term, but including long term. So this is a very cash heavy, profitable company that for the most part are posting double-digit increases year over year for almost every metric. And when we look at the data center segment broken down, the analysts were disappointed by a 69% increase year over year in the data center segment revenue of $3.9 billion. Are you freaking kidding me? At this point, it's basically semantics of them wanting $4.1 billion and wanting to see 75, 76% year over year. Is 69% not good enough for you? I'm hurt. I'm upset. I'm disappointed. My question to you is, how is there such a disconnect with the stock market from a winning recipe, successful company like AMD? It just goes to show that the market is irrational and the hype is all around AI. Furthermore, if we look at their financials and look at the growth thereof, look, 2020, their revenue was $9.7 billion, correct? This is what investors refer to as the top line. To see that $9.7 billion increase to $25.7 billion and the market is punishing AMD? This is ridiculous. This is absolutely diabolical. When we look at the cash flow statement and you look at the free cash flow, it's going from $777 million all the way up to $2.4 billion. And that's after taking into consideration all of their Capex spending that is happening right now. This is crazy. This is unfair. This is ridiculous. But I will say this, on the earnings call, Lisa Su, the CEO, she sounds absolutely burnt out. There was no enthusiasm, no passion, no bullish sentiment surrounding her voice or the vision that they have for the analysts that were just burning her with questions. So when it comes to 2025, they intentionally are keeping it very vague in terms of their growth prospects. And so to see and operating off of what they see on paper, the tangibles, like seeing the data center miss their expectations and not knowing if it's going to be a bullish year for AMD, the analysts have set the tone for the market to sell out of AMD, which for me, I'm really devastated because I invested a ton of capital into this company because I believe in their products, I believe in the vision, and their fundamentals and finances look spectacular. We're not talking about a company that is a negative free cash flow. We're not talking about a company that is decreasing their margins or decreasing their metrics year over year. They're growing in all the right areas. Their balance sheet looks phenomenal. So for me, it hurts. If this was a speculative, crappy, all about the theories and the maybes type of business, then I deserve it. But I'm just confused of how the market is just punishing them so unfairly. Case in point, right now, their forward trading multiple is a 24. And I am assuming when the market opens and they're going to trade at around $105 to maybe $100 a share, that forward trading multiple is going to dip down to like a 22 or even a 21. For AMD to be a part of the tip of the spear of the AI movement, to be trading at a forward trading multiple of almost a 20, that is ridiculous. They're placing them into the same category of a very old conglomerate type of CPG company like Kraft Heinz or even PepsiCo. Does that make any sense to you? And a critique that I have for AMD's most recent earnings is that there was a missed opportunity. I feel like with the DeepSeek AI coming out of China, surprising and shocking everyone that they could develop such a complex and intelligent learning model off of the budget or not the most advanced AI chips, they could have talked about how hey, our chips may not be as technologically advanced as NVIDIA, which by the way, I'm also invested into. So this is where we see eating up market share because our chips can do the exact jobs that NVIDIA can do by producing such a complex learning model such as DeepSeek at a fraction of the cost, and we are able to deliver on the products because NVIDIA currently is throttled by the supply chain of not being able to produce their chips fast enough, whereas we can. We can meet the demand at a fraction of the cost, and we can eat their market share. If she were to talk about stuff like that, or even hint at the idea that they can partner with DeepSeek and other people that are developing AI models across the world at a fraction of the cost, I personally don't think this would have happened. This is ridiculous. You beat on the revenue, you beat on the EPS, and yeah, here you go, negative 9%. Make it make sense. All that to say, when it comes to AMD, based on my discounted cash flow analysis model with an aggressive 50% number baked in, then I'm proposing that AMD, their fair price right now, they should be priced at $218 a share. Are they anywhere near that number? Absolutely not. $108, and I'm going to go ahead and assume when the market opens, if they are still bearish and angry at AMD, they could drop even further down to like $100 a share. And why did I say 50% for the aggressive prediction and forecast? Because if we click here and we look at their free cash flow, when we consider the past 6 years, their free cash flow is growing on average year over year at a rate of 108%. 108%. Yes, sometimes it decreases by single digits, and other times it decreases by negative 64%. However, I'm proposing that going forward, they should be able to increase their free cash flow at a rate of 50%. At which point, if they do, I think AMD should be at $218. However, I do like to play it safe and bake in conservative numbers. So for me, with a 44% discounted cash flow going forward, then AMD should be fairly valued right now at about $173 a share. And they're nowhere near that number. This is the number that I think is more accurate and should be depicted in the stock market for AMD, for what they are doing and what they are achieving. This should be their stock price. And if you think I'm crazy, I'm a lunatic, and I'm saying all of this because I'm bag holding, well, hold that hateful thought. Because if I scroll down and show you what the Wall Street analysts are thinking, they believe that AMD should be worth $174 a share, whereas I am proposing that it's worth $173. So we are seeing eye to eye that AMD on all metrics and accounts are absolutely undervalued at the moment. So what do I think is happening? I think the market is very overreactive. I also think AMD is a company that has fallen out of favor with Wall Street, and rather now it's the retail and amateur investors like you and me that are more believing in the future of AMD, which is kind of sad because you need the big hedge fund money and the big investors' money to help us get the stock price to be reflective of what they truly are and should be at, about $170 a share. And by the way, on their earnings call, I walked away with knowing that they're best in class when it comes to the CPUs. They're eating up market share from Intel with the normal computer CPU chips, and they're now probing into and developing customizable AI chips like Broadcom. Their future is so bright, but there's such a disconnect because of that one segment not meeting the expectations. $3.9 billion, they wanted $4.1 billion for data centers. It is absolutely ridiculous. I'm pissed off. I'm not gonna lie to you. Case in point, AMD's market cap right now is $190 billion. That's not true, because when you consider how it's going to be at 108 or even 105 or $100 a share, their market cap is probably going to be closer to like $170, $160 billion off of a revenue of $25.7 billion. Now I'm transitioning and we're going to be talking about Palantir. Look what is happening with Palantir. So Palantir's revenue right now is $2.8 billion. Correct? Now take a look at their market cap. Their market cap is $236 billion. Does that make any sense to you? And it's not that Palantir is growing their top line at a rate of like 100% year over year. No, they're growing it at double digits, which is about the same as AMD. But what's crazy about all of this is if I pull up their earnings report right here, they just jumped up by 24% to be publicly traded at about $103 a share, which I believe is the highest price that this company has ever been. So when you want to talk about how AMD's trading multiple or PE ratio is too high, well, take a look at Palantir's forward trading multiple. I'm not a hater, okay? I believe in Palantir. I used to be an investor of them, and I sold out of them at a pretty profit. So I understand what Palantir is about, but for their trading multiple to be at a 187 and for the market to be super bullish on their prospects because they did the right thing by having an enthusiastic and a passionate CEO talk about AI. And when you think about Palantir's results, their 64% growth in U.S. commercial revenue and government revenue went up by 45%. Doesn't that sound sound pretty similar to the numbers that AMD is posting in their data center segment, a company that posted $800 million in 90 days revenue. For them to be priced at a premium and more expensive than AMD, it makes no sense. I'm not a hater. As a matter of fact, I want to say this. If you are an investor of Palantir, I'm actually happy for you. I want all of us to be making money and to be happy in the stock market, but it just confuses me and I'm just devastated. If you are also an investor of AMD, do you share these same feelings with me? I know in the long run, we're gonna be okay, but it's just disappointing to see that the stock market does not see eye to eye with me on how spectacular of a company that AMD is. And if anything, this just goes to show that I am not an expert when it comes to the stock market or businesses or evaluating prospects and price predictions. I'm an amateur investor just like you, and I'm learning as I go, but it's just, I don't know. I feel like I made a mistake because I usually stick to my investing philosophy, the tried and true dividend compounders. And the one time in a 2-year span where I go out of my comfort zone and I invest into a high growth company with solid numbers, financials, and fundamentals, i.e. AMD, I get burned and I'm getting punished badly. So it's dude, the one time that I decide to invest into a company that's more in line with my age demographic of less than 55 years old to be invested into growth companies, I get smacked really hard on left and the right nipple to the point where I don't know, I think I'm having a bad day. But I do want to point out that it's not just AMD that is being unfairly and in an overreaction manner being punished to the degree that they committed the worst crime in history and they're being punished for it, because Google also posted their earnings and they're down in the after hours by -8%. But the difference with Google to AMD is that when we take a look at their earnings report, right, Google missed their revenue expectations, right? They wanted to hear 96.5 billion. Instead, they posted 96.4 billion. Are you freaking kidding me? Because of that? But no, it gets deeper than that. When you think about their EPS, yes, they beat the expectations at $2.15 when they expected $2.13. But the reason why they're dropping is because of their cloud revenue missed expectations. That is the segment that Wall Street cares the most about. The cloud, the data centers, and anything related to AI. They posted 11.9 billion, whereas Wall Street wanted to see 12.1 billion. And so consequently, just like AMD, Google is getting a pineapple shoved right up their booty hole, which is also very similar to what happened to Microsoft when they posted their earnings last week. Their earnings per share, they crushed, right? They posted $3.23, whereas the expectation was $3.11. By the way, when I call this out, this revenue, this isn't for the whole fiscal year of 365 days. We're talking about in the span of 90 days. Okay, Microsoft posted 69.6 billion, whereas the estimation was 68.7 billion. So unlike Google, they did beat on the top line. However, what they share in common is that when you trade at a very high multiple of a 33, and I believe Google's is at, Google is at a 25 or 26. The market gives you that high trading multiple because there are high expectations placed on you, i.e. Spider-Man treatment. However, just like Google, Microsoft's Azure missed in their cloud segment. They posted 25.5 billion. The analysts wanted to see 25.8 billion. But it gets worse. Check this out. Google and Microsoft, they're committing themselves to expending and increasing Capex by building out their data centers in order to support their cloud network, websites, platforms. They're building it out right now. And when you spend a lot on your Capex, what happens is your margins get decreased, which consequently contributes to your free cash flow declining as well. And so when it comes to AMD, it seems as if the only business segment that Wall Street and the analysts care about is the data center arm of the business. Is it thriving? Is it growing? Is it smashing and surpassing the expectations? Likewise, when it comes to Microsoft and Google, it seems as if the market only cares about the cloud growth. Are you going to meet our forecast, our numbers. If not, we're going to make sure that your stock goes on a sell-off. And so when you look at Microsoft's stock chart for the past 1 year, 365 days, they are relatively flat at 0.28%. Meaning if you invested into Microsoft, you went all in, balls deep, lump sum investing style on February the 6th of 2024, besides the dividends, your stock appreciation would have only gone up by 0.28%. And that's because Wall Street understands that these companies have been spending so much Capex on building out their data centers in order to support and establish a cloud domain. And so this is where Microsoft and Google come to a fork in the road. They're going to go in two different paths based on their most recent earnings. Microsoft is going to commit to reducing their Capex, and they're understanding we actually don't need as many data centers as we initially thought. We're going to reduce our Capex. Whereas on the other hand, Google is doubling down and they're going to spend even more. If you look at the bullet point right here, Google is going to invest $75 billion in Capex in 2025 in order to support their AI endeavors from like Gemini and to make sure that every video that is uploaded onto YouTube where you're watching this right now has enough network support so that it can stay uploaded. As a matter of fact, Wall Street is not loving this because they expected Capex of $58 billion, but Google is saying, guys, we actually need to spend more money, dip into our free cash flow, and eat into our margins in order to do this based on our forecast. This is what we need to do. And for the upcoming first quarter, they're expecting Capex expenditures to be around $17 billion, whereas Wall Street wanted to see $14 billion. For me, I think Wall Street is just being way too emotional, way too overreactive, and is being unreasonable. Because what I see is that Microsoft and Google are laying down the foundation and are putting in the money and the investments right now into building out their infrastructure and cloud networks so that they can future-proof themselves. It reminds me of Walmart or Amazon, 20, 30 years ago when they were building out their supply chain and logistics network. And fast forward to 2025, why is Walmart and Amazon dominating the e-commerce and retail scene? Because they used Capex in order to build out their truckers, in order to build out the facilities, distribution centers, e-commerce buildings. They did that. They put in the necessary money up front to now be thriving and gelling and cooling. So when I think about Google and Microsoft's Capex spending, for me, it's not a red flag. It's the necessary money that you need to spend today in order to triple or quadruple your return on investment from building out the stuff that you know is going to be the future. Cloud is the future. Case in point, what you see on your screen right now is Walmart. They're one of the best performing stocks on the market. In the past 5 years, they're up by 164%. This is a very boring company, but by spending the money upfront on the projects that helped this company maneuver and navigate through the retail bankruptcies that other major big box retailers went through, and now they're not even a part of their competition scheme. It's only Amazon. It's just Amazon versus Walmart. The ones that invested into the right infrastructure and Capex spending into the right areas, they're the winners in the long run. Case in point, you want me to pull up Amazon? They're also doing the same thing. I think for the longest time, Amazon's retail arm of the business was unprofitable. But now they have economies of scale where they have so many delivery drivers, so many access points, and so many fulfillment centers that for them to do business, the competition just cannot compete with Amazon, except Walmart. Even though I'm butthurt and upset about what's happening to AMD, Google, and Microsoft, I think we are seeing an example of how the market does not behave the way that you want it to. It's not predictable. When you think that a company should go up because they surpassed and smashed their earnings, it goes the opposite way. It just goes to show that you could be invested into the most high quality company with an economic moat that doesn't allow anyone near them, and they still go on a sell-off. I think all of this would make a lot more sense to my logical and rational brain if the companies that I am invested into and talking about here today were posting numbers that were in the red, or if they were unprofitable and they're doing disgusting things. But to be missing at the slightest percentage numbers is ridiculous. This is crazy. So what do you think? What about my thoughts and opinions on AMD Earnings, Google, Microsoft, and Palantir? I would love to hear from you. I'm not going to lie to you, my spirits are crushed right now because it doesn't make sense, but I know I'll be okay. 5 to 10 years from now, I'll be giggling like a nun in a cucumber field, thinking about how devastated I was back in February of 2025 when all of my investments are up and in the green. I know this is just a temporary setback because I think the market is operating off of very high expectations across the board. And if you don't meet that expectation, or even if you meet it, you still get punished. So I don't really like what's happening, but I have to keep reminding myself that in the long run, as long as I continue to invest into high quality companies that are increasing their financials and fundamentals year after year, I'm going to be okay. If I just keep telling myself that the market is going to be irrational and they're going to do their thing and punish stocks unfairly, and in the face of that, I continue to invest into these dividend compounders, I'm going to be happy. I just need to tell myself that. That's how I'm coping. But anyways, I love you guys. Stay safe out here. The stock market is absolutely crazy and bonkers. Nothing is predictable. Anyways, I love you and I'll talk to you next time.